Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Adrien Treccani, founder and CEO of METACO, which provides digital asset management technology and infrastructure. It's great to have you with us. Welcome to Trade Talks.
Thank you for having me, Jill.
And Adrien, why are traditional financial institutions interested in building digital asset capabilities?
Well, it started all with cryptocurrencies more than 10 years ago, and it has moved now to plenty of new use cases related to tokenization, decentralized finance, trading, lending on peer-to-peer financial networks. There is effectively trillions of dollar opportunities by connecting now to these new networks, not just with cryptocurrencies, but to all of the new assets that are creating in there, some which are regulated, such as equities, bonds, and Forex, some which are not, if you think about NFTs and all of these new ways of encoding intellectual property.
What types of digital asset capabilities are banks building?
Well, depending where you look, some are starting with basic cryptocurrency storage and trading. But if you think further than this, it's often quite a bit about security tokenization, taking a traditional security, an equity, a bond, and transforming it into a blockchain-compatible token, which you can store, transfer the same way you would with Bitcoin.
Security will be a major issue for banks and other institutional players looking to invest in the space. What type of infrastructure is METACO building to ensure the safeties of these assets at scale?
Well, cryptocurrencies and digital assets are backed by cryptography, as the name indicates. And cryptography is based on mathematics, and everything is secure with some form of a long password. This password is like a long stream of characters which you have to protect. And if you lose it, if it's destroyed or if it's stolen, it means you have lost your assets. And therefore, the role of the banks in this context is to provide not just a regulated service, but a secure regulated service where these secrets cannot leak, cannot be stolen, and are definitely protected. What METACO does is that we build and sell the software and the hardware that banks can use to get involved in these markets and protect their assets while they build digital asset capabilities.
And Adrien, to wrap up here, when you look out longer term, do you expect to see mass adoption of banks building out their crypto assets and infrastructure?
This is already happening, to be honest. It depends, of course, in which jurisdictions you're looking. In the US, the regulators are still ambiguous about the regulatory framework. In Europe, it's actually much more open, in particular in Germany, in Switzerland. Now, in Asia, this is moving very fast. And just look at the names out there. Some of them are explicitly doing cryptocurrencies today. Some of them are more focused on DeFi or tokenization. But overall, this is a train that has left the station already.
All right. We appreciate the insight, Adrien. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.